Alright, so hello all, my name is Shlomo Cooper and I'm really happy to be here with you today in TradeNet Room. And today we are going to have the second part of our webinar, IPO Born for Success. And you know, IPO is a special occasion on Wall Street when a new company is born as a public one, and we are passionate about it. IPOs are like golden coins on the floor of Wall Street, just waiting for us to be collected, us or savvy traders. Hopefully we are savvy traders. So in the first part webinar, I showed you how to take the opportunity to capitalize on huge gains swing trading IPOs. And if you by any chance missed the first webinar, don't hesitate to click on the link I'm sharing with you right now in the chat room, and there you are going to have all the recorded session of our last webinar. Just a quick reminder, I showed you the potential of the IPOs, and we saw, for example, that Apollo APOL went up more than 1000% in 74 weeks, or Rackspace made a soared almost 500% in 46 weeks. And actually we saw in the last webinar the potential of the IPOs, and this is the table of the best IPOs going back to 2013. And as we can see, INSY made almost 600% in only a couple of weeks. It went public on the 2nd of May, or PETX went up to 174%, and actually I showed a couple of traders here in the room a special IPO account that is specializing exactly in the same trading style I shared with you last time. And this trading account was actually able to make more than 150% gain in the last 5 months only. Now we got a great response for the last webinar, so it's great to see traders like you taking it really seriously, rolling up the sleeves and getting into the job. So it's great. It's great thing to see, and we are going to upgrade all of the knowledge you have in this webinar. So this time we are going to gear up to the day trading level in order to push up our performance really to the limits. The first day of an IPO is initial public offering, just to remind you, gets a lot of attention among traders, and the splash from the debate of a brand new stock on the market is really hard to resist. Investors who have been longing to buy stock when it was private for years might pile into shares when they first start trading. Now, first day changes in IPOs get lots of attention too, and since they can be pretty large, and I can even now recall some of the biggest gainers on the first days, which include, for example, a LinkedIn LNKD, which soared 109% on the first day. It's not a yearly result. It's not a yearly return. It's 1 day return on LinkedIn LNKD, or Twitter. Twitter went public last November, and it went up on its first day in Wall Street 80%. It's 1 day return. So this is really great phenomena and huge gains, and something we all want to be at least a part of it. But do these first day pops or losses really tell investors about the IPOs going forward? And the answer is absolutely yes. Analyzing the last 100 IPOs just 3 of these recent IPOs have seen their IPOs turn positive after a negative first day. And our analysis also shows a consistent story. Three of the worst, and we have it here on the slideshow. 3 of the worst IPOs over the past 12 months actually fell on their first day. So the first day actually gave us a good prediction what the stock is going to do. And in contrast, all 5 of the best 5 IPOs over the past 12 months posted strong first day gains. So actually we can actually build on the movement of the first day in order to anticipate the following direction of a stock. IPOs represent tremendous opportunity for us as traders, but if you are going to trade it in the very first day, you'd better come to Wall Street with a plan. So can we, for example, apply conventional technical analysis to trade the IPO? This is the first question, and the answer is absolutely not. See, technical analysis is the study of price changes in an asset or in a stock market or in an index or in a specific stock over time. Price changes occur due to forces of supply and demand. So in essence, technical analysis is the study of how the supply-demand relationship has evolved over time. On the first day of an IPO, the forces of supply and demand are in their most raw form, I would say. There are no prior support or resistance levels. There are no patterns on the daily chart, and there is no short interest. So that means you can't have a trend line on the daily chart. You can't use moving averages or any other tool you would usually apply in a common play. Stocks in the first day in Wall Street are in the most primitive form, but I can tell you for sure that savvy traders are banking huge gains day trading them on the first day. And actually there are day traders that their whole speciality is trading the IPO on the first day. Frankly, it was and still is one of my most favorite techniques when I was traded in Wall Street for a firm, and today I want to share with you a very simple technique, yet very, very powerful. I used back in the days I was trading in Wall Street, and today I'm still applying the very same rules and the very same technique. Given that you can't short IPOs, and by the way, Colmex is one of the very few brokers, I think, in the world that give you the opportunity to short a trade if you are holding a CFD account in Colmex. But usually a broker can't give you an access to short an IPO. So usually a trader's job in the first day will be to figure out whether a new issue is worth buying for a short or the long term as a trade. So that means we need to assess if the IPO is going to be a blockbuster. So let's see right now a technique I call the art of trading day one of an IPO. And in order to show you and to share with you how to manage risk and potentially profit on day one of an IPO, anyone here in the room should know how to trade IPO and how actually to track it, how to follow it, how to know what IPO is going to go public in what day. So we are going to cover it all in this webinar. The first step is measuring initial demand. You get a pretty strong indication of how an IPO is going to fare in the first few minutes after it opens for trading. So a good IPO, and this is very important to understand, a good IPO should generally increase in price immediately after it opens. But it's important not to blindly chase these IPOs. That's where the art of the first day comes in. When an IPO opens for trading, we look for a range to form after the initial move. And the formation of a range allows the stock to absorb the selling from flippers. Flippers are investors who received payments of IPO shares and then look to immediately sell them for a quick gain. If a stock can hold in a base during that initial phase, this is a very positive sign for us. The range I'm looking for is the first 5 minutes, the first 5-minute bar that the IPO is creating. Think of an IPO as a new baby that has just come to the world. He knows nothing about the world. He doesn't know if it's good or bad. He doesn't have a character yet, and he isn't starting to and he's just starting to explore the new world around him and to check its boundaries. The same applies for a new stock. It doesn't have history, therefore it doesn't have price pattern. It's a tabula rasa, a clean board. Usually an IPO doesn't start to trade immediately after the open bell. It takes time for it to start trading. So what you are going to see at the start is a chart with nothing on it. That means a clean chart, a blank chart, and in between of couple of minutes to 1.5 hours after the start of the day, you will see the very first bar starting to dance on the chart in front of you. So it's quite exciting if you had the chance to experience it. And we don't know if the stock is going to be a volatile stock or a solid stock. We don't know what character it's going to have. Now, the 5-minute bar, the very first 5-minute bar, is the main key to the technique. The first 5-minute bar tells you everything you need to know. It's uncovering for you the big secret. Usually, the first 5-minute bar is going to be very volatile, and in a minute we are going to see how it looks like, and we are going to see usually a spike in the volume. There are times where more than 25% of all the shares float are exchanging hands in the first 5 minutes. So why won't we go to a trade like this, to Lumens, LMNS? This is a trade. This is a new IPO today. All right. So let's take another one. I want to show you something that we already have more than a couple of bars. So let's take, for example, let's take RVNC. All right. I traded RVNC. We can take RVNC from the start of February. So I'm just scrolling back the screen to RVNC. All right, and let's zoom in and let's see how it looks on the first couple of minutes. So this is the very first 5 minutes of RVNC in the world, in Wall Street, as a as a public company. Look on the volume. All right, this is a spike in the volume. More than 500 shares are exchanging hands in the very first 5 minutes. If we are going to go to another IPO, let's say CBPX, this is another name I traded on the first day, and also from the 5th of February, the start of this month. All right, look on the first bar, all right, and look on the spike in the volume below it. Almost more than 700 shares are exchanging hands in the first 5 minutes. All right. So actually, this is the most important bar for us. And this is what I'm looking for. So if the stock go and we have to understand, after the first 5 minutes bar is done, this is where I'm placing an entry above the high. So if we are taking for example CBPX, I'm going to place an entry, a buy stop above the high of the bar. So this is why the first 5 minutes is so important, because above it I'm going to buy to enter this IPO. Remember, the underwriter, and we talked a lot about the underwriter in the last webinar, they are the big investment banks in Wall Street, the big elephants I call them, and they need the IPO to work. So for the first time ever in Wall Street, they want the investor to make money, not to lose money. If the stock goes up, the stock will be attractive to a larger audience, and therefore it will be easier for the underwriter to finish the IPO process successfully. This is what I mean by saying IPO born for success. So usually we see IPOs going up on the first day. If a stock is going up, it will have to breach the high of the first 5 minute bar. So this is my line in the sand. If the stock managed to go above the bar, it signals to me there is a good chance of a winner today. This is where I'm joining the party, and this is where I want you to join the party. When the probabilities are massively on your side, not just a good chance to make a profit, I want the best chance to make the profit. Now, managing the risk is the most important thing when it comes to trading, and especially when we are dealing with IPOs. So before a stock is going to make the breakout above the high of the first 5 minutes bar, which we are seeing right now on the chart, I'm placing my protective stop couple of cents below the low of the bar. So this is the first 5 minutes bar. If the next bar is going to go above the high of this bar, my stop will be below the 5 minute bar. See, the reason I want to enter this stock is the first 5 minute bar. So I'm placing my protective stop below the bar, below the reason. If the reason stops to exist, I don't like this stock anymore, and this is where I'm going out. Now, usually, of course, I want to get better stops, and if I'm going to place the first stop below the low of the bar, a lot of time it's a big stop, so I have to compensate the risk of a big stop by maybe reducing the share size I'm going into this trade, or by placing a better stop below the next bar low. So if you have time and the very next bar is not going to breach immediately, usually you will have time to take the initial stop and place it couple of cents above it, all right, and to cut your risk. Now, usually when I see a burst up, when I see a lot of energy, what I'm doing after the next 5 minute bar is closed, I'm just advancing my stop below the last 5 minutes bar until it take me out. For example, here we were able to take the stock above 1468 and to get out below the low of this bar around 1520. So this is a very nice behavior. Let's go to LMNS. LMNS is a trades of today, is an IPO of today, and this is exactly what we learned. LMNS, this is an Israeli company, started to trade today. Look on the time, all right? The time here, the time I'm pointing right now is 10:34 Eastern time. It's not 9:30. The IPO is not starting to trade together with all the stocks. It starts to trade between couple of minutes after the opening bell to couple of hours after the opening bell. So this is the most important bar for us, the first 5-minute bar. All right, I'm letting it dancing, I'm letting it go up, go down. After I have the first 5 minutes, I have the high, I have the low. I'm placing my buying order. My buy order is above the high of the first 5 minutes. Here in lumens is above 1268. The stop I'm placing below the low of this bar. This is 1249. So we are talking the entry point is 1268. The stop is 1249. This is about 20 cents. All right, this is a stop of about 20 cents, and the stock immediately pops up 1 bar, 2 bar, 3rd bar, 4th bar, 5th bar. All right, this is the 6th bar. Below this bar, I'm just going to advance all my stops below the bar. Below this bar, I'm just getting out of my shares. Usually I'm leaving a good amount till the end of the day, because if the stock is going to work, usually we are going to see another advance along the day, and maybe it's also going to be a good thing to do to leave a couple of shares for swing trading. So as you can see, LMNS right now, this is how we trade it. This gives you, by the way, about 50 cents of gains. We have no partials along the way. We are just advancing the stops below the low of the bar. Let's look on a couple of more IPOs. For example, I want to show you the last IPO. Last IPO we got a couple of days ago. This was on the 21st of February. So again, I'm looking on the very first bar. The very first bar is around 2:35 afternoon. A very big bar, long bar, huge spike in the volume. I'm not touching it in the very few minutes. I'm just letting it going up, going down. I want it to discover its very first boundaries, and I'm just putting my buy stop above the high. Now, what I like to see, and this is what is going on with the SMLR in this occasion, is not to see an immediate breakout. I want the stock to rest a little bit, because if it rests, it gives me an opportunity to advance the stop from the low of the first 5 minutes bar to higher to the next bar. And as you can see, the stop using the next bar is much better from the first bar, and that means I can my risk is less, and that means I can take more shares. All right. Now let's see how to get access to the IPO activity table. How should I know? And I see Oscar already telling you that. How can I know? How can I track down all the IPOs? So I'm using what Thomas wrote you. I'm using the Nasdaq, and so I'll just retype it here. www.nasdaq.com/market/IPOs, and let's see it on the browser. So right now you should be able to see it. All right, nasdaq.com/markets/IPOs. We have here actually 4 tables, and what we are interested in is the first 2 tables. Here you can see the latest IPOs. The latest IPOs are all the IPOs that went publicly in the last couple of days. Usually it's good to track to follow IPOs for swing purposes, exactly like we did in our last webinar. And by the way, if you missed the last webinar, you have here the link on YouTube to watch it. In the right hand side we have here all the upcoming IPOs. So I have here all the dates and the name of the IPO. So for example, if we are going to click on view all upcoming IPOs, I'm going to have here a big list of all the upcoming IPOs for February. So right now, today is the 27th of February 2014. We have Lumens. All right, and we can see it's going to be traded today in the Nasdaq National Market. Also, we are going to see here the range of the price is going to start between $15 to $17. So actually, so the prediction was after the underwriting process, it's going to start trading between $15 to $17. All right, Lumens started today to trade today, all right, for $12.50. All right, so that's below the underwriting level that is listed in the Nasdaq table. Right. If you want to get a little bit more information, just click on the company name. So you are going to have more detail on the company name Lumens. You can see the company address, Yokneam, Israel. You can also have here the company website, the CEO, how many employees, more than 1,000 employees, and the most important thing maybe to see is how many what is the offer amount. So, that gives you an idea how much money the company is going want to take from this IPO. Here we can see a little bit above $122 million. This is what Lumens took out from this IPO. There are not a lot of IPOs till the end of the month. We are coming to the end of the month actually. So we had tomorrow another IPO, VRNS. All right, VRNS tomorrow. The price, it should start between $17 to $19, and hopefully using the technique I showed you, you will be able to gain huge gains on it. Very, very popular technique in Wall Street. All of you should be in IPOs. All of you should be able to take the profit from LMNS and all the IPOs. So this is the webinar for today. This is the lesson. Thank you all for joining us today. And if there are any questions about it, I'll be more than happy to address them right now. Chris is asking, how do you track the actual opening times? So actually, Chris, I don't. I can't track them. You can't track them. Nobody can track them. I can tell you that 95% of them usually start within the first 1 hour. So what I'm usually doing, I'm just for example, let's just take a VRNS. All right, VRNS. So this is the IPO that is going to start tomorrow. So I'm just putting a chart on my screen, VRNS, and I'm going to see tabula rasa. I'm going to see blank. I'm going to see blank chart. Suddenly, at a specific time you can't predict, you are going to see the first bar popping up. And this is actually where the IPO is start to operate. Now you can do it yourself. You can use our trading room. I'm using any IPO in Wall Street. Any IPO is going through my trading account. There is no one single IPO that I let it go without being in my account. So be sure that I'm going to tell you in the trading room when an IPO starts to trade. So if you are with us in the trading room, you will have no problem with that. You will have all the attention of us from now on is going to be IPOs. Every day we are going to have it. I'm also going to remind you in the announcement there is an IPO today. All right. All right. SS7S is asking, what is your percent? What is your win ratio versus losses trading IPOs? Oh, so this is very, very high. I would say it's around the area of 85%. 85% win ratio, maybe even 90%. This is a very, very high quality trading style, and this is exactly why many traders in Wall Street and many traders I educated are becoming expert in trading IPO only. So I'm not telling you to trade IPO only, but there are traders that are making all their earning, all their income from trading IPOs exclusively, both for day trading and for swing trading. All right. All right. Dan is asking, how come Meir didn't trade Lumen's IPO today? So Dan, you know, this is something you should address Meir, and if Meir is here, he is more than happy to respond. But what I can tell you, you know, every trader has his niche. Any trader has his trading style. So Meir is trading his trading style. I'm trading my techniques. They are not all the time the same techniques. All right. GT is asking, what do you call high volume in the first 5-minute candle if you have no reference to compare it to? Great question, GT. I have no reference to compare it. So what I want to see in the first 5 minutes, and let's take for example another IPO, a CBPX. All right, CBPX. All right. So I want to see more than 200,000 shares. All right, more than 200,000 shares in the first 5 minutes. That gives me an indication this IPO is okay. This IPO is getting the attention it needs to get in Wall Street, and that means it's going to be a good stuff to deal with. All right, so at least 100 to 200,000 shares in the first 5 minutes. BW is writing, you may be able to set an alert for more than $1 to see when it begins to trade. All right, so this may be a suggestion, but BW, you know, a lot of trades, for example, CBPX didn't make $1. All right, the first 5-minute bar made a range of less than $1, so the alert would be useless in this occasion. All right, so what I'm suggesting is just to put a blank chart, and it's going to blink in your eye. The minute you will have here a chart. All right, Oscar, thanks Shlomo. Thank you, Oscar. Steve, is there a good method to determine to short the IPO because it failed the peak? So Steve, I told earlier in this webinar that I'm going to trade IPOs in the first day only for long purposes, because the big institutional money, they want IPO to succeed, they don't want it to fail. So and as I told you, most of the IPOs are going up, they are not going down. So I don't want to mess up with short. I want exclusively only to focus on the long side. Sasso is asking, is Lumens LMNS good for long take today? So actually Lumens was earlier very, very good for trading above 1268. All right, above the first 5-minute bar. Now you can set up a buy order above the high of the day, above 1338. If it goes above 1338, this is your call, this is your entry. You may have it. All right. If you want to be a little bit more aggressive, you can have it above the last resistance around 1313. And of course, I just want to remind you that when comes tomorrow we are changing all of our view on this IPO to the swing trading point of view. That means I want to place a buy order on my daily account above the high of the day. But this is for tomorrow, this is for the swing trading, and this is exactly what I taught you, what I teach you in the last webinar. All right. Another thing I want to emphasize is the risk I'm taking. So in one of our next webinar, I'm going to tell you exactly how I'm calculating my risk, how I'm calculating the amount of shares I'm taking in any order. But I have to tell you that I'm taking, because this technique is so good, and the chances and the probabilities are on your side, very, very massively on your side. I'm taking 5 times the risk I'm taking on an ordinary trade, day trading. I will repeat it. I'm taking 5 times the risk on an IPO on the first 5 minutes than I take on an ordinary day trading, because this is has so good probabilities to work. All right. So let's see if we have here more questions. GT, all right. Tim, you missed my question, Shlomo, so just go up to see if I can see Tim questions. All right, I can see it. Can you do any fundamental research to know if the stock will be a great IPO for a day trade, also for this swing trading technique? So yeah, absolutely, you can, during the red show, there is a lot of information that the underwriter is going to publish out. You can go to, for example, you can go to the website of the IPO, and there you are going to have a lot of information regarding the financials of the stock, the company, regarding all the fundamentals you need to do, so you can make a little bit further research. But usually I don't want to do it. I'm just relying exclusively on this technique, because this technique proved itself through the time to be a very, very good technique with very good probabilities. All right, thank you very much for being with me for the last 40 or so minutes. Wishing you good luck trading this technique, and I'll be there next week. I'll be here next week with another webinar. Thank you all.